Okay, everybody. Thanks for joining us this afternoon. My name is Peter Devine, Lightspeed's Director of Client Outreach. I'm sitting in today for Mike Sedek, and we're delighted today to have a presentation.
Hello? Hello?
Yep, sorry about that. We had a little technical issue, but we're all set to go. Evan, I just read a short little disclaimer, and hopefully everybody heard that. If not, just quickly recap that today's presentation is going to be given by Evan Lazarus, T3 Live. As we go through the webinar, if you have questions, just type them into the webinar chat box. We'll review them at the end. We encourage you to ask as many questions as possible. And today's webinar will be recorded. It'll be on our website where you can review this and other previous webinars. So without any further ado, let me turn it over to Evan. Take it away, Evan.
All right. Thanks, Pete. Thanks, Mike. Thanks, everybody at Lightspeed. So today is a bit of an interesting topic, especially in current, we can talk about current market conditions and how it relates, shortly after I'm done with the presentation. But I want to talk about, spend a little bit of time talking about expectations. And at T3 Live and myself personally, we spend a lot of time talking about expectations, managing your expectations, understanding what your expectations should be. So this is a really interesting webinar, and it's actually the first time that I've ever gone through this material. So I'm hoping by the end that, all I ask is that you listen and you try and be a sponge and you try and think about what I'm saying. Webinars are really, really good places to gather and collect information, and it's a place for you to think. So before we start, here's the disclosures. Obviously, you can sort of go through that yourself. And a little bit about me, if you're not familiar with me and who I am. I am a managing partner of T3 Trading Group, which is our broker-dealer, as well as T3 Live, which is our education company. I've been trading since the late 90s, and I really am a specialist at this point in my career in technical trading. My specialty is both at this point intraday trading as well as swing trading. My time horizons generally don't go past 3 to 5 days. So that's really what I call my bread and butter trade, and what I do professionally and what I teach professionally. I have a very interesting product in T3 Live. If you're not familiar with it, I recommend checking it out, taking a free trial. And we do offer technical trading classes. The one that I built is called the Active Trading course, and it really teaches core philosophies that can help, make you understand, how to mitigate risk. That's really the best way I can say it. Traders, as far as professional traders go, you're really, if somebody were to ask me, are you a trader, I'd say yes, but then I would also follow that comment by saying, what I do professionally is analyze risk. So I fancy myself more as a risk analyst than I do actually as a trader. A trader is somebody essentially who just presses a buy or a sell key. And what we do goes way beyond that basic, sort of notion. So let's jump into it here about, developing trade expectations. So whether you're a day trader, a short-term trader, a swing trader, an investor, whatever walk of life you would categorize yourself in, from a market perspective, you still need to have an expectation as to what you're attempting to do. And I think once you inherently develop that expectation, it's going to help you become a better risk analyst. And that, at the end of the day, is the most important thing. So a couple of things we talk about that we look for before we even get into what to buy or where to sell, what I refer to as the playbook, the X's and O's. Well, what do I buy and where do I buy it? That's really all secondary and even tertiary. And what we do before that is actually way more important than necessarily where to buy or what to sell. Having an identity, point number one, and this is a point that I stress very, very heavily in the active trading course. Once you have an understanding of the ebbs and the flows of the market and how to position yourself and how to think and how to understand and analyze risk, which by the way takes quite a bit of time to really get, understand and develop. But once you get there, it's really about having an identity. When I started the webinar, within a matter of moments, I was basically able to tell you what I did professionally, what time frames I live in, and the type of trader that I am and the type of trade that I look for. So I am an expert in something. And I think most traders, attempt to go into this business and they don't ever really become an expert in something. They know a lot about lots of different things, but they never really specialize in one thing or two things. And, that's what we call the identity. Who are you? How do you go about, your profession? There are different ways to skin a cat as a trader. Some traders look for momentum trades. Some traders are more technical. Some traders are even more fundamentally based. So there's different ways to achieve the same goal, but the question is, what's your identity? How do you do it? Point number two is understanding market conditions, which, again, takes a little bit of time and some technical know-how to really understand. And point number three is a positive mindset. And point number three, again, I think pretty self-explanatory. You need to come into the business with the right frame of mind. I'm very against negativity. I've met a lot of traders. I know a lot of traders. And a lot of them have this sort of negative, attitude towards trading, towards the market. If I had a nickel or a dime for every time somebody told me the market sucks, I would be an exceptionally wealthy individual. And the market doesn't suck, and trading doesn't suck, and it's not, we're not being dominated by the black boxes, and those are the things that immediately when somebody says that to me, it's my first clue that that person's making excuses. They don't really understand their craft. And I'm not saying HFTs and black boxes don't exist, but at the end of the day, if you look at a chart, it's still going to be an up or a down picture, and there's still ways to navigate those up or downs. And I think, again, that positive mindset is very, very important before you even sit down to do any of these things. So I want to talk a little bit about the trading identity, which I briefly mentioned to start. It is a defining element for anybody who's achieved any level of success as a trader. Who are you? What do you do? How do you go about how do you go about your profession? Jack of all trades, master of none. That was essentially, and I can only speak really from experience, both personally and with people that I've worked with, in my active trader program. I started out, I wanted to day trade. Then I realized I thought that was really hard. And then I said, well, let's swing trade and let's be in it for, 5 days and then 5 days became, well, this trade, I don't know, let's stick with it, and it became an investment. And I was really never here nor there. I was sort of everywhere. And my results were, very early on in my career, my results were indicative of that. I didn't have an approach. I didn't have a style. I didn't have an identity. I really didn't understand, that how to develop the expectation of a trade. And I think a lot of that stemmed from lack of identity. I didn't really understand. I was a professional, of nothing, other than consistently just, chasing my tail. I think that if you look at any trader, and especially those that live in the shorter term world, the day traders, the active traders, the failure rate statistically is not very, the failure rate, I should say, is very high. And I think part of the reason the failure rate is high is not that trading is so hard. It's not that the stock market is so hard. It's that people don't position themselves, to build for success. The most evident mistake that people make as far as, developing a trading expectation is that, they don't really have a process. Everybody's focused. The one thing you'll hear me say constantly to my students is you have to focus on the process, not the outcome. And I think for 9 out of 10 traders that begin to trade, they focus on the outcome, never having spent any time cultivating a process. And I was, personally speaking, I was that trader. I spent most of my time thinking about the money I wasn't making versus thinking about what is it I'm doing for a living? How am I going to succeed at this? How am I going to have longevity? And I really do believe that if you look at traders that have longevity in this business, 10 years, 20 years, 30 years, you're probably going to find successful traders, and traders that really have an identity. So part of that identity is, again, having strategies that you know how to employ in different market conditions. And we're not going to get into the strategies, in this particular webinar. We have done it in the past, but we're not really going to get into the technical, where to buy, where to sell. But I want you to understand the concept that, if I'm a basketball player and my best skill is a three-point shooter, then that's really what I need to be doing. If I'm a basketball player, again, I'm using basketball as an example, and I'm a big guy and I like to, pound down underneath below the boards, you won't see me out taking three-pointers. So you have to be a master at something, and you have to have confidence in that process so that you can execute over and over and over and over again. I think trading in and of itself is a very simple process. I think what complicates the business and makes it seem so difficult is what goes on in between your own personal ears. 80% of what we do is about the rational thought process. And because the business, is so ingrained in P&L, meaning at the end of the day your product is either profit or loss, it definitely complicates and takes what should be a very simple, thought process to be a lot more complicated. And that, again, these are all things that traders need to work through when learning the process and developing that expectation. So let's continue on. Establishing a trading identity and strategy that fits your personality and your skill set. Not everybody is the same. Not everybody thinks the same. Not everybody feels the same. Some people have, different tolerances. Some traders have different risk, risk profiles. A trader that has an account with, let's say, $25,000 may not have the same risk profile as a trader that has an account with $2.5 million. So you have to understand, who you are, how much can you handle, the type of trader you'd ultimately like to be. Before we even get into any technical concepts in my active trader program, the first question I ask most people after they go through the program and they go into my mentoring is that, paint me a picture of what your future as a trader looks like. So what I'm essentially asking them is, tell me how you foresee yourself achieving a level of success as a trader. So I need them to visualize what that process looks like. Are you day trading? What type of trader do you anticipate yourself being? Why? What is your risk tolerances? Why? How do you handle volatility? Are you a trader that knows how to navigate volatile market conditions, or is that not something you're comfortable with? How confident are you in your skill sets? These are the types of questions that you need to ask yourself before you can even begin to understand how to figure out. Again, think about it like a funnel. So you start at the top of the funnel. At the top of the funnel is the widest part. And you're asking yourself all these questions. And every time you answer the question, you basically go down and deeper into the funnel where it narrows until you get to the bottom of the funnel. And the bottom of the funnel is the ability to basically say, here is my trade. Here is why this is my trade. This is why I like this stock for a trade. This is the risk. This is the potential reward. Here's how I'm going to navigate it. This is the time frame, so on and so forth. So you're starting wide and you're funneling down so you get to the point where you can actually make a rational decision about risk. Never bite off more than you can chew. Most people, most traders that generally tend to gravitate towards my webinars or my education are really two types of traders. One is a novice, who's really seeking out, the information to learn, and two, someone who may not say they're a novice, because they've spent 2 years trading or some amount of time trading, but in reality, what they've done is spent 2 years, chasing their tail, trying to figure out what it is they don't know. Seeking out the holy grail seekers. And I think and again, that's not a fault of people. That's human nature. Most people think they can do it themselves, to realize that they maybe can't. They've lost some money. They see themselves, going nowhere. So then they come to me and they say, listen, maybe you can help me. I need to learn more. And that's fine, but that's really where most people live. And I think that the bottom point is very important here. Never bite off more than you can chew. Establish a strategy. Understand, like I said, be the master of one thing. You don't need to know how to do 50 things to make money in this business. You just need to know how to do one thing and do it relatively well, and rinse and repeat the cycle over and over and over again. Good active traders, good successful day traders, short-term traders, generally are masters of one thing. You don't need to know how to do 50 things. Market conditions. So once you've developed that personal identity and you really are comfortable and confident in your skill set, you know who you are. If somebody were to say to you, how do you make your money? Without question, the snap of a finger, I do this, I do that, and I do that. And that's what I do. And it's a very simple, straightforward process. I'll tell you a quick story. I was at and I've told this story before, but I was at a very early in my career. I was on the brink of basically failure. It was either, get out of trading and figure out something I could do that would be more consistent and less stressful in my life, or, move forward. And I was at a dinner one night, and a gentleman on the other side of the table who I didn't know, it was a friend's birthday, and I was about 24, 25. I was relatively young. And the gentleman on the other side of the table was probably in his early 50s. He was, a few years older than me. And he was a trader out in Chicago on the Merc. And he traded futures. And we started conversation. And I figured, all right, let me pick this guy's brain. I could probably learn something. And within 10 minutes of talking to me, he said to me, look, don't take this the wrong way, but failure for you is not a question of if, it's a question of when. And it was clearly evident in my ability to talk rationally about how I make my living that I really didn't understand my craft. And it was a very pivotal experience for me because I realized, maybe not at that very moment, but as I sat and thought about what he said to me, it made a whole lot of sense. And I find that when I, sit and work with traders, that ultimately comes out at some point. And that's, part of that identity. It's part of accepting the fact that, hey, maybe, there's more to this that I need to understand than what I'm doing. And I think everybody goes through that cycle in their own way. It's very rare that somebody sits down to trade and just ultimately gets it, the light goes on, and they never look back. It probably happens 1 out of 100,000 times. So let's talk about some market conditions. So different skill sets generate better or worse performance under market conditions. So, for example, if you know that you are a multi-day or a multi-week swing trading strategy and you're operating off of analytical time frames with longer time horizons in terms of days, hours, what have you, and your risk-reward principles are generally a little larger percentage-wise than somebody who may be a day trader or a shorter term trader, trying to navigate and trying to trade a market environment that is not conducive to what you're doing will produce obviously less than stellar results. So not being aware of market conditions can generally, be very, very defeating, even if you understand the strategy of which you're operating from. So part of understanding your identity is knowing, when it's the right time to, be involved and when it's not the right time to be involved. And technically, there are ways that we teach to understand that. So it's not a guessing game. It's never, I don't mean to sound like a Monday morning quarterback, and after a month of the market chopping around, you finally say, you know what, this market really is just driving me crazy, I'm done. There's a way to see it, as it's developing or as it's happening that we teach that really can give a big, big warning sign, for those that maybe the current market condition isn't as conducive. And I say that all the time to both the longer-term traders as well as the momentum, intraday traders that are looking for those quick, quicker type trades, where I find a lot of times the shorter-term traders, the day traders and momentum traders, are always chasing price. And, again, there are ways to prevent yourself from doing that. So, understanding market conditions can be very, very detrimental as well as beneficial so long as you understand, what's happening. You're able to make a rational thought process around it. A bias. I think every trader, trades with a bias to some degree. It's not something you can just, I think, get rid of. I think it's not reality to say don't have a bias. I think whether everybody generally falls into one side, they're either a bull or a bear. And that's fine. That doesn't necessarily, that's not a bad thing. It's just be aware. I think it's really more important to be aware of your biases so that they don't have negative impacts on your results. I would never, it's like me telling a trader, great traders are not emotional. Great traders show no emotion or have no emotion. In all honesty, that's probably a load of crap because we're all people. People have emotions. Whether you're a great trader maybe just knows how to compartmentalize those emotions so that they don't impact the what, in terms of what that trader is doing. We try and tell traders, it's okay to have a bias, just understand if that bias gets in the way of achieving results. And then we talk about the next point, which is predictions rather than probabilities. Trading is a business of probabilities. It's not a business of exacts. There's no exact in trading. There's no magic fairy dust. There's no holy grail. There's no software. There's no system that will give you exact results time and time again. It does not exist. Good traders think in terms of probabilities and deal in terms of probabilities. Whether you're buying a stock, shorting a stock, whatever it is you're doing, you're basing it off of a probability. So think about it this way, and the most clear way I can explain it is the game of blackjack. And again, I don't equate trading to gambling in any way, shape, or form. I think it's actually very, very different. But the concept of blackjack is that you're betting you go to a casino, you're betting every hand. The game is very different if the game were played if the dealer, if the dealer were to give you two cards and the dealer were to show a card. So for instance, the dealer, deals you two 10s and you have a 20, and the dealer is showing, let's say, a 6, and then the dealer says to you, sir or ma'am, would you like to bet this hand? Well, what are you doing? You're essentially getting to pick and choose the hands you want to bet on because of probabilities. The probability of you winning that hand statistically is a lot greater than the probability of you if you had a 13 and the dealer had a 10, right? The probability would severely decline. And that's the way good traders need to learn to think. It's not about predicting. It's about probabilities. So we teach traders to look for strategies and setups that generally increase the probabilities of success. And I think that that's a very, very important point for anybody that's trying to navigate or trade the market. We don't make predictions. I don't wake up in the morning and say, I think the market's going to be up 200 points today, or I think XYZ stock is going to be down a lot. That's not what we do. Predictions are for people on TV. Predictions are for people that don't trade. It gives them something to talk about. That's not what traders do. Traders think in terms of probabilities. You focus on what's happening. That's the important point, not why it's happening. And again, it goes back to the concept of the media. I don't care necessarily as a trader. I'm all about price. I make money from the movement of price. Price goes up, I stand to make money. Price goes down, I potentially stand to make money. I don't care about why price is going up or why price is going down. I find this to be very common with traders. Well, the stock went up today because it did this, or because of this news story, or the market was down today because of Bernanke, or the market was up tomorrow because of that. Stop thinking about why and thinking about what. What is happening and how can I profit from what is happening? Stop thinking about why it's happening. It's not really going to make you any money. Headlines. I don't necessarily believe in headlines. I think headlines are a waste of time because headlines don't dictate what's going to happen. We make our money, like I said, from price. I focus on price. Price is my primary indicator as well as volume. Volume is the engine that drives the car. So I know that I want to look for movement of price with that strong volume behind it. That's commitment. That's when you know that something is concrete and legitimate. And that's what we teach traders to focus on. A positive mindset, again, goes into this whole sort of arena that we're creating about the expectations. You need to have all these elements in place so that you can manage your expectations, like I said from the very beginning. So in the long run, the difference between traders who leave the business and the ones who achieve longevity is really their mental makeup. I try not to buy into the general, trader sort of negativity that lives out there. And there's tons of it. If you go into Twitter or you turn on TV or you read blogs, there's a lot of negativity out there. Try not to feed into it. Try and focus on what's happening in front of you and how you can potentially profit from it. I think good traders, great traders, are pure capitalists. We're opportunity seekers. We don't care how that opportunity comes to us or what form it, whether it's shorting or being long, but opportunity is what's paramount to us. That's what I think creates a positive mindset. I teach my traders to think in terms of opportunity. You are opportunity seekers. Understand what opportunity looks like and then how to actually, execute when that opportunity presents itself. So it's a process where you have to A, understand what the opportunity looks like, and B, know how to execute and maximize that opportunity when it does become, set up in front of you. The other part of that is understanding when opportunity is not paramount. This is not a business per se where you can just press buttons every day and make money. Trading is a business of quality, not quantity. And I'll say it again. It's a business of quality, not quantity. And I'm speaking primarily to the day traders that are lurking in this webinar. You know who you are. And it's not being a day trader is not a bad thing. It's a great thing if you embrace what you do and who you are and understand that sometimes getting up and just because the market is open or just because your computer is on does not mean that that is a rationale or a reason to trade. That will cost you a lot of money and potentially your career in the long run. Think in terms of quality, not quantity. When you've exited a trade, learn from it, but never let it affect your next trade or your self-worth. There's going to be bad trades. You're going to sit down, you're going to get dealt a 20, the dealer's going to have a 6, and you're going to lose money. The dealer's going to pull a 21 on you. Doesn't mean just because you have the right setup and the right situation, there's no guarantee. So understand when something doesn't work, learn from it, move on, but believe in what you do. I think from my experience, traders are so concerned with being right. I have to be right. I think it's going up, it has to go up. That they get themselves into tailspins. It's not about being right. It's about managing risk. What you did today, what you did yesterday, what you did a week ago, a month ago, whatever, it's history. And you have to be able to move on to the next to fight the next battle. I ask my traders here in my firm, tell me what you did 3 Wednesdays ago. How much money did you make 3 Wednesdays ago? And the immediate reaction always is the same. Well, they look up, the eyeballs go straight up, and they think. And then they say, I don't remember, I don't know. And that's the point. You shouldn't remember and you shouldn't know. Because if you are an active trader, no one day should essentially make or break your career, your month, what have you. So once you've exited a trade, learn from it and move on. The difference between being able to read a chart and understand technical indicators and being able to pull money out of the market on a consistent basis. That's the difference. So as a mentor, and this next bullet point I could probably talk about for an hour, but I'm going to try and keep it, under 2 minutes, is something that I realized for myself very early on in my career, and as I've mentored, students in my program, I see it more and more often. I think novice traders or traders that start their career, they get into a trade, they lose. They get into a trade, they lose. They get scared. They don't know what they're doing. They lose. They lose. They lose. Their P&L, goes down. They see a red P&L. They lose. They take a loss. They move on. They take a loss. And after a while, that fear of losing becomes almost a natural experience. They stop, because they've gotten hit in the face so many times. It doesn't really affect them as much as it did from day one. But what actually happens is that when a trader gets into a good trade and it starts to work, and the trade starts to, let's say, go up, and you're long, and your P&L turns green, and you're up $100, $1,000, whatever the numbers may be, 10,000, whatever the numbers might be, you don't know what to do with yourself. You say, oh my God, I just made money, I got to take it. And then 2 hours later, 2 days later, the stock's up another 10%. And you say, oh God, I should have held it. And there is a bigger fear of making money. And it really goes into a whole process we teach about trade management. But understanding what to do when you're actually in a good situation. I think every trader at some point knows how to take a loss. Oh, I've got long, here was my stop, I got stopped out, I took a loss. But what happens when that trade actually works? How do you maximize that trade? Because that's really ultimately the most important part, is what to do when you actually have a good situation on your hand. And I find that traders will puke, pardon my French, but will get out of a good trade a lot faster than they will a bad trade. And it's a fear. I really look at it like a fear of making money. And you have to be aware of it. Is that something that, is that something that holds you back? And that's why we develop risk-reward scenarios, and we set target prices, and we teach our traders how to structure a trade so that if it starts to work for them, they know how to scale out of a trade based on certain predefined levels. We talk about eliminating emotions, and I talked about it before. You can't eliminate emotions. It's impossible. You have to learn to be aware of your emotions. You have to channel your energy in a positive way. I tell my traders, and I'm sure there's some of them probably in this webinar. I know that I'm growing as a trader. Even me personally, I'm growing as a trader when I am freaked out, when I am out of my comfort zone, when I am just really on the edge of my seat. I know that I'm forcing myself to do something that's not natural. And it's a very hard thing for people to do, but once it's over, you realize that, you know what, I pushed myself, it wasn't so bad, I navigated, I got through it, I kept my rational thought process. That's when you know there's growth in trading. Perfection. Don't look for perfection. You're not going to be perfectionist. Trading is not about being perfect. Trading is about, carving out small pockets of risk with bigger pockets of reward. It's not about buying the bottom, selling the top, or anything remotely like it. So lose the perfectionism. You're trying to build a process that you can use over a long period of time. You're trying to build a process where you can navigate bull markets, bear markets, and trend-less markets. Okay? It's either going to be one of the three, and you're going to have, and you want to be able to say to yourself, when I wake up in the morning, I'm an earner. I know how to earn. That's what I do. Doesn't matter if it's a bull market or a bear market or a trendless market, you're going to know how to navigate each particular market condition. Embrace change. Markets change. In my career, I've seen the markets change. The dynamic of the markets change probably 3 or 4 times, and it's something you have to embrace. Embrace what's in front of you, because if you can't embrace it, it means that you're not doing something right. Learn to love what's in front of you. Don't hate the market. Don't hate, the things that happen. Just embrace it and say, it is what it is. I have to either be a part of it or move on to something else. And again, achieve longevity. Traders that are really committed to being successful in trading, I believe from day one, whenever it starts, they focus on the process. They're committed to having a process so that they know exactly how they make their money, what they're good at, having their identity, and then they can adjust, year after year as they become more seasoned. So if I'm going to put it all together, part one is developing your identity and perfecting it over time with the help of an experienced mentor. Generally, that's what most people do. Again, I find it very rare that somebody can do it themselves. Identify based on your comfort level and by quantitatively analyzing your results over time, what type of market sector stocks you achieve success with, and these are things that we, again, teach in our program. And commit yourself to finding a way to be successful. No excuses, no fears, don't become fearful, don't be short-sighted. Again, ask yourself the question, am I focused on the process? Because if you are focused and truly focused on the process, at some point, there will be an outcome. But if you're only focused on the outcome with no process, you will never have exactly what you're focused on. And surround yourself with people that can help. Successful traders, knowledgeable traders, people willing to share their wisdom, and knowledge and experiences to help you. My whole mantra, for lack of a better word, is that, I've been doing this for 15 years at this point. I've seen every type of market condition. I know how to navigate. I'm confident in my skill set. I have a process. I want to be able to share it. And that's my only way I can give back in this, in this type of a business. And I feel like once traders get to that level where they really do understand the process, chances are they're going to get to where they want to be. So, again, that's my, spiel about, expectations, and I think expectations is how I wrap it all together. When you get into a trade, you have to know exactly what you expect and why. And you have to know there are parts of that go into the funnel so that, like I said, when you get to the bottom, you're prepared to make that trade. Because I love Lightspeed so much and they've been so good to me, I'm going to offer a promotion for the Active Trader course, and there should actually be a promo code here. Give me 1 second and I'll put it in. But it's usually a $2,000 product. For the people of this webinar that use the promo code, I'm going to give a 35% off discount as well as 2 tickets to the Active Trader Summit, which we're hosting here in New York in mid-July. So just give me 1 sec here, and I will give that promo code. It is LIGHT1297. Again, it's LIGHT 1297. LIGHT 1297. So, and again, to go through that, just go to the go to T3 Live. I'll show you what to do here real quick. Go to t3live.com. Again, here's the Active Trader Summit. If you click on Active Trader course here and you enroll, click on Enroll Now, it'll take you to a place where you can put in that promo code right here, LIGHT, L-I-G-H-T, 1297, and you'll see the discount applies. So that's it. With that, I'm going to open it up for questions, and hopefully Pete can help me with that.
Okay, great, and thanks for that presentation, Evan. Typically what happens is when we open it up for questions, they start coming in fast and furious, so I'll go through what we got so far and see how much time we have. So Evan, the first question is, and I'll read it, I've been trading for 3.5 years. I made a net of 40K the first year, 60K second year, 100K third year, and I'm up 40K this year. I've been net profitable every month but 2. So my question is, how did you step up trading and take it to the next level? Is it just a matter of gaining more experience? I've personally found that when I have traded with more size, I have trouble handling it, and it puts me into a trading slump. Thanks.
Well, I think again, it's a good question, and I commend the results because they are good results. I think it's not. I find that from my experience, traders that try and become more aggressive or put on more risk or more size or however you want to look at it, it's like touching an oven. And you do it once. You say, okay, well, usually I trade again. I'm just making up hypotheticals. I usually trade 1,000 shares of stock. I'm gonna trade 3,000 shares, and you buy 3,000 where normally you would buy 1,000, and you lose. And because you have 3 times the position, you lose 3 times what you're comfortable losing. It's like touching an oven where you find out the oven was on because you touched it, not because you knew it was on, so you burnt yourself. So you're afraid. Now you're afraid. And I think it's really a process where you're committed to saying, okay, if I know that what I do over my sample size works, you have 3 years of data, you've obviously achieved some level of success doing whatever it is you're doing in your particular craft, it's about being consistent in upping your approach. You don't have to go from 100 shares to 500 shares. You don't have to go from 1,000 shares to 10,000 shares. Just up it by 20%. Do it gradually, but be consistent about it. Nothing has changed other than your risk reward is a little bit larger. That's all that's changed. So do it in a gradual approach. Do it for 6 months. Do it a year. You should start to see if your process is good, that your results are getting larger. You're pushing the envelope a little bit. But it's not about doing it. It's doing it with a plan. 20% larger for the next 12 months. And then when you get to that level, assuming you can up it a little bit more and do it, but being consistent in your approach. It's not about, hey, I used to trade 1,000 shares, now I bought 10,000, I just got crushed, I lost everything I made in the last 3 months. That's not a smart way to do it. So build yourself a plan of how you're going to increase your risk without necessarily changing the process for the outcome, and do it over a large period of time. Do it for a year.
That's great. Thanks for that. A couple other questions. So Evan, would you comment on the bullet point that referenced if you're day trading, sitting in front of the computer all day? The question is, do you think it's necessary?
Do I think it's necessary to what?
Sit in front of the computer all day when you're day trading.
I mean, look, if you're day trading, you've accepted the fact that you are going to try and navigate the shorter-term ebbs and flows. I don't think it's necessary to sit there all day. I mean, it's about finding opportunity. It's trading, whether you're day trading, swing trading, or what, it's about looking for opportunity. If you are sitting there all day and you can't find opportunity, then no, you shouldn't be sitting there all day. If you're sitting there all day and you can't find opportunity and you're still trading, then there's a problem, because you're trading out of boredom, out of lack of something better to do, which is the antithesis, which goes completely against everything we preach. It's about, it's like a baseball player. That's the best way I can, if you're a day trader, think about it like you play baseball. When you get up to the plate, do you swing at every pitch? No. You have to wait for the pitch that that you can identify in that split second that it's coming to you. That's the pitch you want to swing at. And that's kind of the approach that I swear by as a trader, and what I teach to my traders. It's about knowing what your pitch looks like, and you can sit there all day. The real test of a good day trader is the trader that can sit there all day and not do anything, because you know that you are pushing yourself to be patient. You know that you are pushing yourself to do the right thing. Trading, like I said, is about identifying opportunity, not I trade because the market's open.
That's a great analogy. I'm a big baseball fan myself, so I'm glad you went down that road. So here's another question, Evan. Is there a good way to tell the market conditions are changing intraday?
To tell they're changing, you say intraday?
Yeah.
Well, I mean, there are. The technical way that we generally teach traders to understand when something's changing is by using moving averages. We teach something called time frame alignment, and we look at multiple time frames, and we evaluate what our key MAs are doing in those time frames. When those time frames align, we know that those are the conditions we look to be more aggressive. When the time frames are not aligned, when our smaller time frames, again, our 5 and our 13-minute chart, and I've gone over this in other, I think in a different webinar, are not aligned with the analytical time frames, which are the 34, the 55, and the daily, we know as traders that's not an optimal trading environment, and there is a higher degree of failure or the chance of the setups failing. And that's a loaded question because I could probably spend 3 hours going into that, as it is a very, very deep topic. But yes, there are ways that we can analyze when something is changing, and even more importantly, what to do when something changes and how to navigate it.
Okay, thank you. So that's all the questions that have been posed to me so far. So if there are any other questions, this would be an ideal time to ask them. If not, I'd like to thank Evan for a great presentation. And Evan and the folks over at T3 Live, as you said, are big fans of Lightspeed, and vice versa. We are big fans of T3 Lives as well, and appreciate the generous offer that you've made to the Lightspeed community to take you up on the promo code offer. I think that's great, and I hope that the folks listening to this will take you up on that. I'm getting asked how long the promo is good for, so maybe you could just clarify that if you could.
It'll be good till 5 or 6 o'clock tomorrow evening.
Okay, so time sensitive.
I think it was Light 1297.
Yep.
I also, Pete, if I could, again, you can always email me with questions about any of this stuff. My email is Evan, E-V-A-N, @t3live.com.
Okay. So as we said, here's one more question. So we'll take that, and then we'll bring this to a close. So the question is, I'm more of a long-term trader. It seems that day traders go back to cash frequently, if not every day. How do I deal with keeping a large part of my portfolio invested while dealing with the ebbs and flows of the market?
Well, that's a lot of a question, but what choice do you have? I mean, if you've accepted the fact that this is who you are and this is what you're trying to achieve, embracing those short-term ebbs and flows is going to be a part of, ultimately your success as a longer-term trader. You're not going to just get into a trade, over the next 3 months or 6 months or 6 years or whatever your time frames are, watch a stock go, straight up or straight down. There's going to be ebbs and there's going to be flows, and it's, understanding that's part of what you're doing. Again, whether you're trading with a 15-minute time horizon or a 15-month time horizon, my question goes back to what is the trade, what is the setup, and what is the risk? That really is, at the end of the day, that's the most important part of the equation. So if you've accepted the fact that you understand the risks associated with your trade, you know what your stop loss is, you know what your expectation is in terms of profitability, your work is essentially done. Now the stock just has to act in accordance and do what it's going to do. Maybe it'll get there in 3 days, maybe it'll get there in 3 years. I don't, again, I don't know from what you're looking to achieve or why, but that's how I approach every trade from an investment standpoint, a day trading standpoint. It really is the same process, just different time frames, different risk tolerances. So you got to be able to ask yourself those questions. If you're going, like I said, if you're accepting the fact that you are not day trading, you have longer term horizons, you have to be able to withstand the gyrations that it takes for stock to get from to A to B. It's not just going to be a straight line.
Okay. Actually got 2 more questions. And the first one, Evan, is any advice to those of us trading an account that has become less than 25,000 K now and subject to the pattern day trader rules? So I guess more or less they're asking, any advice for folks that are trading, without the leverage of the pattern day trading rules.
Well, I don't, again, nowhere in my course of this presentation have I talked about pattern day trading or leverage or any of those components. Trading is trading. I think that if you are trying to day trade and you are undercapitalized, meaning you have less than the pattern day trader requirements, it's going to be harder because essentially it limits what you can do. So part of the struggle of this business is that traders want to be able to trade. They want to be able to, trade more actively, but because they're undercapitalized, it's prohibitive. You have to navigate with what you have. If you are an undercapitalized trader, it's not a bad thing. Just understand that, you have to trade smaller. You have to look to be more consistent. You have to trade off of higher time frames. Usually, the analytical time frames are the area that you should live in. Craft out your your risk scenarios, understand what you're doing. Again, it's the same answer I gave to the question before, and just embrace the fact that, you know, to get to build up that account is going to take time. It's just, you know, you're not going to put on a trade, and every trade is not going to make 100%. Your portfolio is not going to grow rapidly. It's going to grow incrementally, but over time it'll compound. You know, a $25,000 account over time could become a $35,000 account. It could become a $50,000 account. It could become an $80,000 account. You just have to stay with the process and watch the equity build. It's not about leverage. It's really at all. I think if you want to day trade, and you know you want to day trade, you want to, you know, go out flat every day with no positions, obviously you need to meet the, you know, the financial requirements.
Now, that's an excellent point. Okay, so another question, and this is the last question, I guess. We have another question after that, but it's pretty technical in nature, and we'll cover that offline. So the question at hand is, hey, Evan, do you use hard stops for risk?
Yep. Yep. The line in the sand is the line in the sand. When I execute a trade, let's say I buy a stock, the next thing I do, within a matter of seconds after execution, is put in that hard stop. There, you know, that's my job. My job, essentially, is as a risk analyst, is to execute when it's the right time, mitigate the risk by controlling the risk. I use the hard stop, and then letting the trade develop and play out as I anticipate it should, based on, again, my strategy and my set of probabilities. And it's a very simple process. I don't ever deviate from it, ever.
Okay, thank you. And for those asking the question, you know, about stops and those types of things, there's some documentation on the Lightspeed website after you sign in the Knowledge Center that, you know, we have some client memos that clarify how stop orders work on the Lightspeed Trading platform. Definitely encourage you to check them out if you haven't already. So with that, I'd like to, again, thank Evan for an excellent presentation. You know, Lightspeed remains committed to trader education, and, you know, the ongoing web series that we offer on Wednesdays is just one component of that. As I mentioned in the beginning, and I apologize for some of the audio difficulties in the beginning, as I mentioned, you know, this webinar, as well as many others, they're recorded, and we put them on the Lightspeed.com website, you know, for archival use. You can play them back at your convenience as many times as you'd like. And by all means, we certainly have some knowledgeable support folks here that are happy to, you know, answer whatever questions come up, and we encourage you to, you know, use those resources. So, again, I'd like to thank the listeners, and I'd also like to thank Evan from T3 Live, and we hope that we see you again on the next webinar. Definitely encourage you to go to lightspeed.com/webinar to check out the schedule of webinars that we have, as well as our pre-recorded webinars that we've already archived. So thank you all, and definitely encourage you to check out Evan's special offer. As he mentioned, it's until tomorrow. You know, so take advantage of that. It's a generous offer, and I think it would really help traders. Thanks, Evan.
Thank you, Peter. Thank you, everybody.
Take care, everybody. Bye now.